Hello, I'm Martin Smith, and this is your UFX Markets Week in Review. Today, we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we do that, let's look at last week's rises and fallers. The euro-dollar had a somewhat mixed performance throughout the week, but reflected a big drop, losing 3.33% to close at 143.14. The British pound struggled against US dollar, though most of the week the pair closed at 163.64 for a loss of 2.04%. This was the fourth consecutive week where US dollar showed losses against the Japanese yen. The pair finished the week trading at 80.61, a drop of 0.7%. The dollar-CAD pair had a decent week, gaining 2.3% and last trading at 0.9664. Looking at commodities now, gold had a tough time. By the close of Friday trading, it was down 4.35% to close the week at $1,495 per ounce. Though these were not small losses, June crude orders took an even bigger tumble, dropping nearly 15% on the week, with orders closing at $97.18 a barrel by the end of Friday. In news this week, the euro dipped the most it has in the 4 months against the dollar after European Central Bank President Jean-Claude Trichet gave indications that he will not increase the interest rates in the coming month amid expectations that Greece's debt crisis is worsening. The euro began to slide just after the ECB left its key interest rate untouched at 1.25% on May 5th. The euro saw a gain of more than 3% after raising the rate by 0.25% in April, which was the first increase in almost 3 years. Some speculation is circulating that Greece may well leave the euro, but nothing concrete has indicated that this is the case. At this point, however, investors and analysts are taking a wait-and-see approach. The Canadian dollar dropped the most since July against the dollar as the country's main export, crude oil, felt huge drops on fears that the worldwide recovery is losing momentum. With commodity prices making significant drops this week, the largest drop since December 2008, the loonie fell from a 3-year high against the US dollar. With Europe's sovereign debt coming into focus again, the US dollar became a preferred refuge and cut most of the CAD's recent gains. Sticking with North America, in the United States, the non-farm payrolls were released, showing an increase of 244,000 jobs last month, the largest increase since May 2010. In addition, there was a revised increase of 221,000 for the previous month's payrolls, and private employers added 268,000 jobs in the month of April, the largest increase since February of 2006. This data has helped relieve some of the concern that the world's largest economy is slowing down as commodity prices have been soaring and fuel prices are at their highest level in almost 3 years. If the situation in Europe continues to deteriorate, expect the dollar to continue to strengthen. Well, that's all we have time for today. We hope you enjoyed our weekly review and hope you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.